Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for May 22nd, 2024. Appreciate your patience. Had commitments these last couple days, so haven't been able to do the live in progress. So I'm gonna suspend the hybrid swing in order to catch up on 3 days of trader coaching. So, Jay, this is also for you. The session we did tonight with cohort one went into, I think, good detail on the collapsing dragon, based on some good questions from Juan Carlos, and we're kind of clarifying how to treat the collapsing dragon. There were, just as a public service announcement, there's two cases in which that happens. The first one is you waited to see a harsh winter that reversed and which triggered an SSC entry, which failed. It failed down below the belly of the RL10. And when price violates that level right here, that's where the collapsing dragon occurs. That's also where somewhere on this line, the PSAR dot is going to reverse. But what triggers it is price going below the previous maximum adverse excursion of the RL10. That's this one. Now, it could have been, in the perfect world, that after the rebound, maybe the R10 came to a point and it never even got to your SSC entry, but it failed sooner. We like that even more because that tells you that the buyers were even weaker and they couldn't stem the tide. And that means that the harsh winter that triggered all this is really strong. You have very strong selling pressure and very weak buyers. That triggers the best case of the collapsing dragon. But if you got an SSC and it failed, then the violation of that same price level triggers the collapsing dragon. Now, hopefully, we were able to get our stop to no lose plus dinner for two, so we might have been able to capture a little piece right here or in here, and not suffered the entire loss. But the main point is it's where the RL10 reversed, where the new string of PSAR dots began. When that price level was violated, that's what creates the CD. And that's case number one when you have a indisputable harsh winter, which tells you that that symbol is in play with the primary trend to the downside. And then this is a failed reversal. And the price that tells you that the original harsh winter is still raging on is when it violates the low of the RL10. Check or hold. Case number two occurs when you had an optimistic experience where you had the R10 reversed and what you had was a strong upward move. Let me paint that in green. So now what I had was a successful SSC. And it peaked right here. And then somewhere in there, I made a decision based on rules to exit and give back maybe 1 unit of risk. And way down here where that R10 reversed the last time, this is where the collapsing dragon was going to occur if this support level failed. That's where the collapsing dragon occurs. So this exit right here, after the R10 reversed, I give back 1 unit of risk, but it protects me against giving back 2 or maybe even 3 units of reward if price were to come all the way back to the previous support level. If I am short in here, that's not a collapsing dragon. That's just a supported fall crossing to the downside. Where you get a collapsing dragon in the optimistic scenario is if my SSC was successful, it pulled back, it made a higher low, and now maybe it crossed the dragon, and it gave me my little Kata 2 entry to the upside. Hooray, I get to buy a rising low. Now, the Kata 2 is officially successful only when the previous peak of the RL10 is exceeded. This is where I get double plus yummies because the Kata 2 was successful. That's where we get an emerging dragon. I have new information here that the previous strong trend, in spite of this little pullback, has continued to be strong, and it's making new highs compared to the previous maximum favorable excursion. So where do I get a collapsing dragon out of here? I get a collapsing dragon if the Kata 2, instead of going to be successful, fails, and now it makes a lower high, and it violates this low on that leg. This is where the collapsing dragon occurs, number one. And then if that were to fail all the way down here, back to where the original support level was that we used for this move, I get a second CD. That's where my second position occurs. So this is a tactical short, and then this is the decisive short. But what I have to be prepared for is that because this price level here, where the R10 reversed, was a strong enough support that enabled this positive move, when this thing fails all the way down to here, I have to be ready for that to continue to be support. And if buying pressure comes in, it's going to erase my original short, because the buyers that loved it here might love it here. And that's the last thing that happened when it came down to this level was a nice move. So I'm not allowed to be surprised if that has a nice move. That's why we say when this thing makes a lower high, that's a tactical short with a collapsing dragon, and I'm only playing for a return to here. If it actually breaks through, then I can get the big collapsing dragon with my second position, and then down we go. If I were to combine those, you might see something like an initial harsh winter that reversed, gives me one nice SSC, which tries to reverse, but then fails. And now what I have is I have a high, a lower high. This low right here, we think of that as a 1, 2, 3. If this is a lower high, then this support, when it breaks, now gives me a collapsing dragon to here. And then if this breaks, I get a second collapsing dragon for the big move. But this is a test of this previous support level. And we got to remember that the last time it was there, it did this, which was a winning trade. So if I'm short here, I have to be prepared to cash that. And then if it fails the second time, I can re-enter quickly. But I don't want to lose the gains of this tactical short until it's proven to have broken support that held the last time. So that was about a 40-minute discussion that you just got 5 minutes of. And that's what we covered in the coaching session. That's kind of similar, Jay, to your question, which we'll cover tomorrow night, which was once the R10 reverses, how long do we want to wait before we take that exit, especially if we know if we took it early and then it just reverses, we know how to get back in. Why let it come all the way down to here? And we'll talk about the relationship between the RL10 and the SMA3 and the and how I'm using the skin of the dragon. What that's going to come down to, Jay, is that when you're tracking one symbol like you do with the SPX with great proficiency and really focused attention to detail, whereas I might be tracking, 5 or 10 symbols, I need a simpler rule that gives it more room to find itself. I don't have to be as precise because I have a wider array of trades that I'm trying to manage simultaneously. So I can't be that detailed on 5 or 10 symbols. And so I'm making a trade-off that I can accept a wider stop loss in order to pay attention to more symbols. But the fewer symbols you're attending to, the more precision that you can get into the exit and rapid reentry. And so that's kind of a preview of tomorrow night's coaching session. Fair enough? Okay. I'm going to jump straight into sniper trades of the day. So I'll catch up the hybrid swing tomorrow. So we're going to take a look at, this is sniper trades of the day. So these are all 3-minute charts, the sniper trades of the day. This one is on DIA, the Dow 30. So the blue box is the opening range 3. Here's the close. There was a gap open down here, and this is the opening range 3. It reversed and started to go higher. So we took the entry long because it went higher than the high of the first 3-minute bar. That's the OR3. And that's the standard risk box in DIA. That rolled over pretty quickly, and we kept a little fraction. So this is the case where we tried to give it some room. So we're long here, and it went as high as here. Here's where the R10 reversed, and we took the exit at the VWAP. So we cashed a micro win here compared to the big risk box. So we stayed as long as we could to give it a chance to make gains early, but we didn't want a winning trade to go negative. So we took a fraction on that one. Took a re-entry when it crossed back above the Bollinger Band mean and above the dragon. And that one scratched quickly again. And notice this time that it is below. It's having a hard time to get through this 3-day anchored VWAP. And the R10 peaks are finding resistance like right there. So when this rolls over again, I'm not surprised when it fails here like it did the last 2 times. So speculation is over. I just scratch it instead of hanging on. Now this time it actually breaks below the intraday VWAP. So to make that a little bigger, here's the intraday. Whoops. Here's our intraday VWAP. Oh, come on, Kenny. I keep hitting the thumb button on the pen and it stops the drawing. Sorry. So there's the intraday VWAP. As long as price is north of that, I feel good. But when it now breaks below that, instead of having an upward bias, I now pick up a downward bias. And my hope is that it will go below here or below the low of the day, and that will sort of confirm that it wants to move down to the 10-day anchored VWAP. So I'm making a standard risk box here. And that's the same size as this risk box, same size as that risk box. So there's standard work. And my target is that it might get down to here. So if that's my 1 unit of risk, I'm looking at potentially 3 units of reward. So that's the justification for taking that trade. And then you notice that the RL30, which is the slow regression line, has also rolled over, and that creates this as an owl entry to the downside. So my long side bias is over because the owl is pointing down and it rejected the 3-day anchored VWAP 3 times. Check or hold. This one moves out nicely initially, then it reverses twice. Couldn't get as far as the 10, but this felt like enough of a reversal that I want to lock in. Feels like about 0.8 of a gain. Like it had a chance to collapse on this bar, but it gave me a 1, 2, 3. So this feels like if it was going to fail, it should have gone right away. But that reversal was enough to get out to lock in that 0.8. Now I have a crossing the Bollinger Band mean. The PSAR has flipped. I'm very close to the intraday VWAP. Grinding, 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 nothing. Now notice how the RL30 rolled over again. So that says, hey, this had 2 really good chances to go to get up here to the 3-day anchored VWAP. It didn't. So let me cash again this little micro gain against the standard risk. Something is better than nothing. Now it breaks down below like the previous belly of the RL10 and the PSAR. That makes this a collapsing dragon with a standard risk that reaches all the way back up to the intraday VWAP. So this feels like a good short, and my target is going to be down to here again. And that gives me something like, for 1 unit of risk, it gives me 2 units of reward. Check or hold. It doesn't quite make it, so I take the exit, and then it reverses quickly, so I re-enter. So I'm eager to preserve this little bit of gain. Again, it runs down here and then can't hang. So I take the exit here. It immediately fails again through that previous low. So I try short again. Standard risk. I've locked in a fraction here, a tiny piece, a fraction, a fraction. So I'm getting sandwiches rather than full meals. This one, though, collapses nicely, and I let it come all the way back to the PSAR because I wanted to give that an opportunity to fail again. But when it comes and hits the PSAR, I got to get out. So there's 1 unit of risk. That's almost 2 units of reward. So when you net all that up, it's somewhere around maybe a little over 3R for the day on DIA. Check or hold? All right, this is XLF. This is the sector spider for finance. That blue box is the opening range 3, so it was a little bit of a gap down, and then it took off to the upside. It has a relatively wide risk box, so I'm long at the green dot. It gets back to the 5-day anchored VWAP, then fails. The R10 rolls over. So I take the exit at the skin of the dragon, and that's worth about 0.5 compared to the size of this large risk box. That's like 15 cents. So we get half an R there. Now, this is exactly the pattern that I talked about at the opening. You know, you have a successful trade. The R10 peaks, it tries but now fails. And now when you get the lower high, this break right here makes that a collapsing dragon. It went through the Bollinger Band mean, and now I'm hoping to get to the 3-day VWAP and then to the 10-day anchored VWAP. That would be nice. And this is my unit of risk. Same size as this one. Nice collapse reversal. I take the PSAR exit. It finds support near the low of the day. So I try that as a stop and reverse. I'm hoping to see it get through the 3-day anchored VWAP, the Bollinger Band mean, the intraday VWAP, then the 5-day anchored VWAP, and then the high of the day. So I've got a series of price levels that I'm hoping that it can get to. That's like a little stair step or a ladder of prices. If it gets up through there, each one of those is confirmation of strengthening of the trend. Where I'm really excited about this is if it can break out above the previous peak of the day. If it gets up into here, that's going to be great. It won't, but we can hope. It gets to the 3-day anchored VWAP and then stalls. So I exit for a fraction. It collapses back through the Bollinger Band mean, and the MACD histogram turns to red. So that's a COTA 2 short. Now I want you to notice that this is also that same collapsing dragon pattern that I talked about earlier. Here's your R10. You had a high, a low, a lower high, and now if it breaks through here, I have this collapsing dragon. So this is a COTA 2. I'm trying to front run this break right here. And I can have my execution to get out of this is right there, even though for position sizing, I'm using a full risk box. I'm really only risking about that much because I wouldn't stay in that trade longer than that. But this thing collapses. And I'm able to take a PSAR flip exit. And that one gives us about an R. So there's the unit of risk, and there's 1 unit of reward. You get short here, and it rides down, comes to the PSAR and exit. That's a very orderly move. And I want you to notice that the sector spiders with lots of volume tend to be very orderly in their moves. They flow like ocean waves as opposed to being really spiky. That's a relatively orderly move. So that's finance. Check or hold? Okay. Uh, Clean energy. There's your opening range 3, a breakout above with a standard risk box. It runs up fast. The R10 peaks. Here's your rollover. It comes down now and hits the skin of the dragon, so I get out. There's 1 unit of risk, 2 units of reward. That's the Kata 2 reentry. Another R. Missed the reentry. So this one started rolling over, so I took the exit at the skin. I could have re-entered here. I had span of control issues and I missed this trade. In retrospect, we say, well, isn't it always wise to trust the PSAR? Yeah, probably so. Could have stayed in this whole trade. If I just trail with the PSAR, I get out here for 1 trade. In retrospect, that feels correct and I feel stupid intraday. But you got to make decisions in the moment. Comes into the station, begins to get weak. Now I want you to notice how the RL30, which was long and strong this whole way, comes to a peak right here. And now we get that downside. And this is where we start getting into owl territory for the downside. And especially when it crosses the 30-period simple moving average right here. This price action in here says, aha, maybe we got weakness coming down to the intraday VWAP, the 3-day and 5-day and 10-day and 30-day anchored VWAPs. There's a significant move to the downside available. So I wonder, maybe there's a way we could trade that. Nope. I thought about this one here because it really failed to break out any further. All it did was kind of monkey around here. And this whole thing feels like resistance. And now this one felt like it turned to winter. And I felt strong about that's a potential short. And I'm still looking for the same targets, VWAP, 3-day, 5-day, 10-day, 30-day VWAP. I didn't take it. If I take it, the standard risk box should be something like this. The same as this one, same as that one. It gives a VWAP magnet, and so that trade was there. I just didn't take it. Lacked the zero state. This one is AI. This one collapsed immediately from the open. I shorted it and failed. I shorted it again, same risk box. Got my loss back. Shorted it again as it continued to roll over. So here's that Kata 2 to the downside. You have a peak in the RL10, it drops down, it comes up, and now it starts to fail again. So I got a lower high that makes this front running a collapsing dragon. So this is a Kata 2 short. I'm trying to get it here, anticipating that it's going to break this way, and I want to get it here rather than here. Checker hold. It scratches or a micro loss. I tried the short again because it did not follow through to the upside. I get a little fraction. I'm almost tired of this thing. I try one more time. Oh, this is the one that works. So they all look the same leaving the station. And the key on this one was that you got these lower highs. When this one did not break through and go this way, Instead, it collapsed below here. This is a new low of the day, and we've already got one position in hand, and that's new momentum. Bang. And now we're close to 3 p.m. So I got to get ready to exit here. That's two positions that earns about a total of 4R. So that earns, like I said, all of these shorts, they all look the same leaving the station, but that's the one that worked. So what are you going to do? Here we have Mexico. This one was very hard today. This was choppy for all our Mexico traders. Here was the close, and this big blue box is the OR3. The second bar was here. The third bar continues to fail. So I got short here because it felt like it was rolling over, and I wanted to get in. I knew I was going to get in here anyway. So I'm thinking, well, maybe I can just get short there. So that was my idea, to play the momentum. There was very few things in the market that were working on the long side. That ended up working for a while at first. You know, it did this, but then it reversed. And so I kept the no lose plus dinner for 2 against that short, just so it wouldn't go negative. It then broke through the PSAR and the PSAR flipped. So I tried the long. That thing ran up and came all the way back for a scratch. I'm thinking, man, this is really volatile. I probably need to leave it alone for a little bit. No, try short. Fractional gain. Give it a rest. Now I like this one. Let's see why. I'm going to try to not pay attention to the specific price candles, but I'm looking at the RL10 as the smooth indicator for price. I like that. It has higher lows, and by this time, the intraday VWAP, which is here, let me make that orange like I'm supposed to, sorry. That intraday VWAP, which is here, is really my boundary between positive bias and negative bias. So the fact that I got higher lows leads me to have a bit of a favorable bias. The fact that it gets across the VWAP and gets across the 30-period simple moving average, which is the middle of the river, that's this. So now, price at this level, it breaks through the current PSAR. That's good. It has gotten through the intraday VWAP. It's gotten through the Bollinger Band mean. It's getting ready to test these two price levels. All it has to do is get above this price, and that thing could really go. So I'm ready to speculate in here. And my standard risk box, as always, is going to look just like that. In which case, if it failed, I would go short anyway. Check or hold on that frame. That one works in a burst, but this is EWW, and it's been flaky all day. So that thing ran all the way up and then gave me a 1, 2, 3 exit on the downside, skin of the dragon exit. So I'm actually able to cash that against that unit of risk. So that's about a +1. I probably gave back too much, but I was optimistic. That was my mistake. So then it recovers, and I re-enter and scratch. Now, this one, let's see how quickly the worm changes, right? So here's our intraday VWAP again. The later you get in the day, the more important that becomes. So again, if price is north of that VWAP, I have a long bias. If it's south of that VWAP, I have a short bias. So price following, we're going to follow that RL10, did this. This is where it collapses below the anchored VWAP. Now I'm hoping that it can come back to these price levels. So if I've got this unit of risk on and my target is here, because I think it may come back and test, I can get 1, 2, maybe even 3 units of reward. Check or hold. It does that, and I take just the standard PSAR flip exit for about 2R. I thought really hard about this as an SSC. Why? Well, because we clearly have a harsh winter. The R10 reverses, it crosses the dragon, the PSAR flips. That could very easily have been a stop and reverse. And I thought about it right here. It was getting late in the day, so I didn't take it and then regretted it. And what did it do? I want you to just notice that the target in this one, that late in the day, the target is always, hey, it can get back to the VWAP. This is the VWAP magnet trade. So on 1 unit of risk, there was legitimately 2 units of reward just to get back to the VWAP, which is what it did. Didn't take the trade, had span of control issues, but that was that. So those were the sniper trades of the day. Let's take a look at play catch up now on the traders. Just for those of you keeping score at home and playing along, if you, instead of going to the primary and intraday mastermind where we post our charts, if you go to the files, transcripts, and search, you'll see the thumbnails for each of the days of the past 5 or 6 years, and you can quickly navigate to the thumbnails. You can right mouse click and say, let me open link in a new tab, and then you can see the full chart, which is what we'll see now. So we're going to go back to Monday, kind of blast through this pretty quick. Hamad gets what was available. For 0.2 on Mexico. He tried to stay out of the chop, and he did that pretty well. Later in the day, when it finally starts breaking down, I would take that short all day because you're really close to the low of the day. And if this breaks through here, it's going to be a big move, but he takes the scratch. So I think he played that one correct. Gets 0.9 in DIA by getting advantage of the long side. He gets a fraction on the short side. The reentry might have helped him. He might have been a little more aggressive in here after the Z3 pinch, but bringing in 0.9, a conservative way to manage the conservative index, and that's good work. He gets 3.8 in Brazil, and this illustrates that on days when the U.S. is hardly moving, EWZ, Brazil, and EWW, Mexico, can really move. So he tries the short, stops and he thought about stop and reverse. He waited for confirmation. He considered that as a second entry, didn't take it, and then gets a perfect exit at the skin of the dragon. So if he gets a second position on, that's probably 4R instead of 2.6. And he does a nice job here. When it doesn't follow through, he cuts it quick. He waits for lunch to be over. When it violates through the VWAP, he gets the short side bias and crushes that. That's how you do it, guys. Let's see. This one, yeah, okay, that was Brazil. Okay, Jonathan, a little choppy in here. I like the short scratches it quick, he re-enters short, cuts it quick, tries the long, has to take the minus 0.7. The re-entry was probably here, although I understand wanting the confirmation there. This is unfortunate, stayed a little too long. I'd like to see you out here. The re-entry could be here on a Kata 2 instead of the emerging dragon. That's a good exit. So the Kata 2 entry gives you a fractional gain instead of a fractional loss. This is a great SFC. Where I want to see you exit is in here, maybe one bar early. I like this one as a scratch. You stayed out of the chop. This is worth a shot, and it just didn't follow through. So there's some micro improvements that probably brings this back to a scratch or a fractional gain, but not bad. Kevin gets 0.8 on EWW, hits all the turning points nicely. You can see that, and he's added the baby dragon to his RL30 to fine tune his entry a little. Gets 0.7 on the 30-minute bar, so about 1.5 for EWW on Monday. The power of focus. This is, let's see, who is this? Trying to remember who this is. Well, this is an OR3 short scratch, -1 scratch plus what probably nets out fractional gain about a 0.5 for the day. That's good work. Put your names on them so I can remember. Joe smashes this for very nice entries in here. Here's the SSC, tries a second position aggressively, gets a total of 8.5 out of this, and nice exit above the VWAP, perfectly done. Quick loss, quick gain, could stop and reverse here. And so he ends up getting about 8 or 9 for the day. Notice how this one, the big one of the day, aligns nicely with the harsh winter, now getting into spring. It's not even summertime until here, and that's a nice long growing season. And then it gets choppy in here, so maybe we're trying maybe a little too hard in there, but I'd take that one all day on the long side. So really nice work, Joe. For over 8. This one. Oh, okay, that's the same one, but in PDF. My bad. This one is I think this is also Joe. The big gap down says this thing is going to be in play all day. We just don't know which direction. It reverses nicely, so he gets an SSC off the bottom. Rides it up to here. There's some Kata 2s along the way, but that's really a grinder. You don't give up much. I think he took half here and the other half here. So this one gets him 4R. Still pretty good work. Executing that one in options. That's good work. This was yesterday. 7R on SMCI. A tech on 3 minutes. There's the big gap down, consolidation with higher lows. Speculates in, takes the first exit. Re-enters on the Kata 2. Nice exit. Re-entry on the Kata 2. Nice. Lets it chill out. Emerging dragon. Tight risk. Perfect exit. Doesn't even get this one, but it's still 7R. And I think it's the semiconductor, if I remember, or super micro. Okay, sorry. Nice work. We'll like 7R. This is EWW yesterday. Short, make that red so we can see that that's actually a short position. Exits here after 2 legs down and comes back to the PSAR. There was actually a Kata 2 or an SSC in here, and then a re-entry short when it goes below the VWAP. That short is possible on EWW. Add your R totals so we can assess performance here. Here's Tim on Merck, trading 3 minutes. And he gets the gap and go, standard risk, and cash, and waits for it to come through the VWAP and gets short with standard risk, crushes it, exits, 4.5R. We like it. Monday. Good work, guys. This is Alcoa, another 4.8, so almost a 10R day so far. Long, standard risk, runs up, takes the dragon skin exit, tries short at the VWAP, cuts it quick. I think you could re-enter here. He waits for the PSAR flip. Why not? 4.8. Come at me, bro. This is this today? I think. Yeah, this was a pretty choppy day today. Today was a tough one. -2 in DIA. Yeah, this was just a chop city today. I had real trouble with that one as well. Not much more you could do on today. I don't really have any heartburn with any of those. If you want to really be technical, maybe on this you might get a little earlier, but that doesn't change much. Yeah, there's just it just did not move today. Gets 3.3 in EWW. And again, he's large when he's aligned with the market. OR3 smashes it short, cash, re-enter, cash, double bottom, SSC, cash. There's your short. There's your short. So that's 3.3 and doesn't even get that chunk. But so we don't have to be perfect. Thank goodness. 1.5 in Brazil. Same thing. He gets aligned really well. And he gets big wins when he's aligned with the move. When the moves are directional, which happens a lot in Brazil and Mexico, he gets the big move and he doesn't give much back now. That's good stuff. Kevin, this is today. No, I'm sorry, this is also yesterday. This was Mexico on the 3 minutes for 1.4. He's hitting all his spots nicely. Notice he gets when it crosses the VWAP. Here's that VWAP. This is where he picks up the long side. He gets the SSC early, and then that's the second leg. It crosses the VWAP, so again, he gets the short orientation, Hulk smash. So nice work, nice work, nice work. This one fails, so he quickly reverses and picks up the SSC. Boy, that's nice. He's still kind of monkeying around with different ways to array the screens between 3 and 30. He brings in 1.7 on the 30-minute. How nice and smooth that is when you have a large directional day. No improvements. This one is George. 2.7 doesn't take the 2R battle drill, but has a nice relaxed entry and re-entry. Perfect. Had enough, didn't take the Kata 2, which would have paid, but hey, we'll take 3R. That's a good way to get her started. Sundeep, welcome aboard. He just started the coaching with cohort 1. We got off to a great start already. And he's back in the saddle. His initial planning document from the coaching session today to organize his project for the whole year was a masterpiece. And the discussion of it was a very good coaching session. That was probably worth the price of admission and justifies you being interested in the coaching. But gets the nice, he doesn't even take the SSC notice, but gets the Kata 2 for 2R, quick cut, and then gets paid for 0.9. So when he's aligned, he's large. When he's not aligned, he cuts it quick. No, this is still fine. I don't mind that one. As long as you cut it quick and then reverse it, because now what you have is a confirmed upside move, you still get that part of the move. So just saying, you can still take that short, but like you did, you got to cut it quick and be ready to realign with the long side. Let's see, Hamad. What are we doing here? Yeah, trying too hard to make it work instead of letting it find its own level. That's way too much guessing and second guessing in there. So we got to be a little more judicious. Same with EWW. Today was just a hard day for both of those. Better on DIA. George, let's see where we're at on this. 5.1. So 1.4 for the day. He's able to detect the chop early and waits for it to settle down. So he's able to stay out of this and waits for a clear indicator later. You'll notice that's the same one I think I took. He gets the Kata 2 and breaking above the Bollinger Band mean in time to catch the afternoon move. Boy, that's just right. Nicely done. Jonathan, yeah, today was a tough one in EWW. I wouldn't do much different, except as you noted on the on the crossing of the this Kata 2 right here. Take a look at my markup too. There's an indicator right there that failure to fail, higher lows, crossing the VWAP and the Bollinger Band mean and breaking the PSAR. We got to trigger on that a little sooner, maybe even here. That's maybe waiting a little too long. We could even get it on a Z3 breakout. So any one of those three is justified. And then this is still a really good exit. That exit makes all three of these or any of those three really good. I like this short, and I like that you cut it quick. So there was some learning involved inside there. I think maybe this could have been cut a little quicker. And then this one, I might be able to take in here instead of here, but I like the quick cut. Like I said, today was a small range day and EWW, just not much room. Sundeep, 4.6, and this is in Qualcomm. Now, that's not fair because he's a signal processing engineer too, so he knows Qualcomm pretty well. Here's the OR3. He notices this. That was the exit he took from yesterday's hold because it had closed at an all-time high. So he gets the gap up and then it starts to fail. So he cashes 4.7, tries the short, gets a fraction, sees the Kata 2. That's perfect. There's your risk. When this comes back, he locks in 1.5. I like the Kata 2, but when this is supposed to go right away. I don't think that's a premature entry. You had all-time high, nice close. You got a confirmation upside. I'll take that all day, but you got to cut it here instead of here. That we should never be taking -2 on that. We got to be cutting that here. And then after this chop, here's your short. So now what we get is we get this short out of this sideways chop that you've marked off. That's the breakout. And then you get this trade instead of that trade. And I like this effort, and that gives you a 0.7 on the backside. I like that he drew a 1 hour box around the price and used that as the breakout box. And then that's why I think you can take it here instead of here. And if you treat this as your CD, That's the entry you're getting here instead of all the way out here. Really good work, guys. You got big gains on days when it was directional, and I think you managed losses on an inside tight choppy day when it was like that. So good work. Let's see if we can get the catch up on the reports. Yeah, we've seen the sniper trade of the day already. We're making new all-time highs, pushing those upper limits pretty nicely. 529. That's been quite a Kata 2 move. This is like there's your Kata 2. Crossing the Bollinger Band main. That's a Kata 2 trade. It broke above the emerging dragon here. So this is still all good. We got a couple more days this week to see how much more juice is in there. But every day it doesn't collapse gives you a little more belief in the upside. The only caution here for us, we snipers, right, is that the 5-day volatility is this red box. This is really a tight 5-day range, a range compression for 5 days as compared to the 10-day volatility, which is this. Right? So there's about the 5-day is only 1/3 of the 10-day. So this is a range compression at an all-time high. So now this sets up a what we would call a fireworks, which is really successful upside trade that is paused. And now you wonder, is that the pause that refreshes? So the breakout to the upside must be taken. But on the downside, if that fails, we got to be ready to be short at least by the southern skin of the dragon or the 10-day VWAP. And the target to the downside is back to the Bollinger Band mean at 513 or the 30-day anchored VWAP at 512. So from 530 down to 513 is $17 on 53, and that's 3%. That's a 3% potential retracement. So we've got to see this as a compound critical state for the next 2 days, and we just don't know which direction. So we're going to have no directional bias, but we're going to be prepared for a large move out of the 5-day range compression. I almost want to just stop right there and say that's what you got to focus on. So I maybe even think I will. But, if we're looking at dashboard 1, really strong moves, bullish, quiet. We're in risk on, but it's abnormally extended. So that makes this a compound critical state, meaning it's ready to break in either direction. That's what a sniper's got to be ready to do. Follow the price immediately when it comes out of that tight compression box. God, that's important. The tale of haves and have-nots. There's things that we're breaking down today and things that were making 6-month highs. The energy sector was weak. Devon Energy and ExxonMobil were weak. But tech was pretty good. NVIDIA and Texas Instruments. So that whole semiconductor complex, pretty good. The ETFs, mostly on the upside, but it was tech strength. Look at tech is finally back in the leadership. That's the Qs, the NASDAQ tech, and this is the S&P tech. Nothing else was making gains. This is tech only. So that narrowed focus makes it a little risky heading into the next couple days. NVIDIA's earnings will be watched by 1 billion people. Some daily squeezes, a lot of squeeze plays today. Tech is one of them, mostly summer. Today was the first give back we've had in a while. But notice the ones that are working, the Qs and XLK. It's a tech rally right now. And then in the tech companies, Oracle, Microsoft, Cisco. Cisco is a value play with a lot of lagging to overcome. That's the 2-day strength. That ain't bad. All right, fellas, almost done here. Hang in there. Yeah, we're still in this little convergence zone here where the RL10 has come back a little bit. The RL90 is trying to stretch its legs. The 30's made a nice recovery and is pausing. That is a compound critical state ready to go hard in either direction. As this rolls over a little bit after a nice little COTA 2 recovery, compound critical state the next 2 days. This is a trader's delight. Do not have a directional bias, but be ready for big breaks tomorrow and lock it in when you can intraday. That's what I'm telling you. Take good care. We'll get this published and posted. Consider strongly joining that coaching program, guys. I mean, we're doing some really good work there, and more coming. And this is kind of the last chance to get it before October. I'll be closing the doors here at the end of May. Take good care and see you tomorrow.